So as with yesterday, we'll start off with a panel session, and then we'll go into separate tracks for banking and insurance. So to start the day off and to get us all going again, I'd love to hand over to Volker from SAP, who can introduce the panel.
Morning, everyone. I have to say, we have some losses this morning. Huh? And I saw a couple of guys at the bar at a later point in time. Let's see if we can get everyone in here. Water, please. So, what do we want to talk about today? From fintech to techfin, the ecosystem evolution in the financial service industry. We started the day yesterday with the new perspectives on the future of financial services in the keynote. We had a couple of sessions over the day, and we ended the day with Brad King. I think it was fascinating, his outlook, and what we have to expect and deal with over the next couple of years. And he made the turn to financial service towards the end of his presentation as well, and I think that's the perfect segue for us, to kick off day two and discuss some of these things which are top of mind and influence our business in more detail. So therefore, I didn't want to do that myself. That would be a bit boring, and we want to hear it from the customers as well. I have three wonderful partners for the panel with me. I have Chris Troszek from Northland Trust, Tim Holmes from the Bank of London, and my good old friend Charlie Platt from SAP Pioneer. So please give them a warm welcome. So let's start with a short round of introduction. And I go from left to right. So Chris, sure. You had a long way to come here. Yeah. From the wonderful city, the windy city of Chicago.
Yeah, thank you. Appreciate it. Good morning to everyone. Chris Dvorak. I'm the head of the insurance solutions practice at Northern Trust. So Northern Trust is a global institutional bank, 140 years old, headquartered in Chicago, the Windy City. Our presence in EMEA is substantial. Our biggest locations are London, Dublin, Limerick, and Luxembourg, and then in the APAC, we are presence in Singapore, Hong Kong, Manila, and Bangalore, and Sydney. And again, Northern Trust is, the focus is really three specific business lines: asset management, wealth management, and asset servicing, which I'm part of the asset servicing division. And the other aspect of Northern, and to be clear, since I am responsible for the insurance solutions practice, Northern does not sell insurance. I mean, when you think of insurance, it's really two sides. You have your premium and claim side, and then you have your investment side. And what Northern Trust works with clients, we have roughly 180 insurance clients in the space, is on the investment side. So we provide services from clearing and custody to providing credit to our clients, securities lending, asset management, and why I'm here today is investment accounting, because we leverage SAP's financial asset management platform to provide statutory accounting to our client base.
So that's a very broad range what Northern Trust is covering. So that's good. So I expect a lot of insight later on how fintechs help you or change your side of the world as well. Let's go over to Tam.
Morning, everyone. Tam Holmes. I'm Chief Product Officer at the Bank of London. Sort of in contrast to Chris, who's in a 140-year-old institution, we're brand new. A very old name.
140 days, or?
140 days, exactly. So we're at the start of the journey of building a global clearing bank, which is super exciting. In terms of locations, London at the moment, but we'll be entering the EU and the US in the fullness of time. I'm really focusing on servicing corporate clients and FIs in their sort of what's called deposits and payments needs. I want to remain quite focused as an institution at this point in time, and really think about unbundling Some of those services that I think in the universal banks probably don't get looked after and get as much love and attention as they should do. So I really want to focus on that aspect of the market. Nice to meet you all here this morning, and thanks for getting out of bed and coming along for the first session.
Okay. And then, Charlie, you have seen a lot in the financial service industry.
Sure.
From very different perspectives as well. So please.
Yeah, so good morning, Charlie Platt. I am actually from the youngest company. To us, even the Bank of London's actually an old company, because Pioneer is only 10 months old, of course. But yeah, so I run the EMEA business for Pioneer, and I actually come from SAP, so I came across as part of the separation of the businesses. Looking after EMEA, it's quite a diverse market from the stuff of Western Europe right the way across to the southern tip of Africa. There's a lot of different aspects to financial services, and of course we cover from the banking side, the insurance side, and also the bank management side, as we call it, so much more on the finance part of banking as well. So I pulled together the teams from the delivery side, from the sales side, from the pre-sales side, to make sure that we have one proposition for our customers. Yeah, and I come from a background of many years of financial services technology, starting with algorithmic trading software 20 years ago when we were doing real-time databases even then. So yeah, that's my background.
Thank you for coming here to Amsterdam for your short trip from the financial capital of the world, London. Good. And some might disagree with me on that, but I have to give it to London, yeah. So let's start with you, Chris. Let's look a bit back what happened over the last 10 to 15 years. We have seen a dramatic change in terms of innovation. Before that, I think 100 years there was almost zero innovation in financial service, or little innovation. That's beside the ATMs maybe and some other. But in general, there was not a lot of movement. It was the same institution, was a bit consolidation in the industry. But since 10 years, we are seeing a major shift. So if you look back, so what are the things you take away from the last 10 to 15 years now, the evolution of financial service looks like?
It's almost, what hasn't changed. It's been, the last 10, 15 years has been remarkable in regards to progress in the technology space. I mean, you think about everyone in this room, I'm almost certain, has a computer in their pocket, in essence. And we all know this year is the 15-year anniversary of the iPhone. So it has changed how we do things every single day. And to be candid with, I have 3 kids, and the impact of the iPhone, and if that is taken away, I mean, that is their life, right? That is their social life. But the impact on business is as critical. From the standpoint of what you do day in, day out, the access to data, it is real time. It is real answers, and you want to get the answer yourself, so there is no more waiting. But it's amazing the impact as well when you think, obviously, sustainability is the hottest topic, it seems, over the last many years. But what that has meant when you think about just, you download an app now, rather than, usually I've been to numerous conferences, usually you're getting a thick book of the presentations and such, and now everything is online. The paper industry is taking and has been. I haven't had a paper delivered to my home in I don't know how many years now, because everything is online. So it's the transformation is massive. And then the other piece, obviously, is the interface with your clients and where that has evolved over that time. And again, because of technology, I mean, the demand that they have is ever increasing in terms of getting them their data in an accurate, thoughtful way.
Especially in your type of business, asset management, that was purely relationship management, communication, everything on paper.
Yeah.
So it has changed dramatically, and it must be a big change for your sales force as well and your employees.
Without a doubt. We have a concept of the file cabinet where they could retrieve their data, their PDFs and CSVs and Excel files, and And now we have evolved into the true digital interfaces where, you know, it was brought up yesterday in a conversation of, you know, there's hundreds of reports sitting out there, but which ones are actually being leveraged? And now UIs are delivered to the clients and for them to access and get customized and really they, you know, almost self-service in terms of the answer they're seeking.
Now, Tim, you obviously, T-Ball is a brand new company, but you know, as you obviously observed all the changes over the 10 years, and maybe you can say something about the motivation of going to T-Ball and starting that business. What led you to that, doing it right now?
Yeah, I think, is it on? Yeah, thank you. I think in many ways, sort of, the last few years have been about the digitization of the front of the bank, as I would describe it. So, you know, the iPhone in your pocket, the internet banking, but I'd say the digitization of the back of the bank is yet to happen, and a sort of reinvention of that business model. And you know, I think that's what's drawn me to the Bank of London, is to think about, you know, what should the business model for banking look like in this next decade? And, you know, is the universal banking model that's really dominated for the last 50 years, is that the right model going forward? You know, because it's quite interesting when you look at money. Money's actually been digitized for a very long time. So if you think about the sort of the financial services stack from the real world all the way down to the money, actually digital assets have been around there for a long time in terms of the bits and bytes that make the money in the commercial banks. But really that sort of stack from the consumer down to the digits hasn't been fully digitized. So I'd say the front of the bank has been digitized over the last decade. But this next decade really is about going into the business processes and thinking, how can they be reimagined? How can the movement and the storage of money be reimagined for this new age? So I think it's super exciting, you know, and I think there's going to be a lot of transformation, particularly in commercial banks over this next decade.
Yeah. And Tim, especially in your business, you're in the payments business, you're based in London as well. Faster payments, is that something that drove the existence of more fintechs in that space?
Yeah, definitely. So I was at Lloyds Banking Group in 2008 when faster payments went live. You know, there was a whole change in things like fraud and customer behavior driven by faster payments and the adoption of faster payments as well. So that, you know, that just really changed the consumer market in particular. And an ecosystem of fintechs sort of surrounding, I guess, the key storage of money and the movement money sprang up both to support the customer journey, but also to protect the customer journey. So that ecosystem is really driven through instant payments. So I think that will continue to evolve during this decade. I actually think there's going to be a lot of consolidation in the space. A little bit like the security software market. I think it's very fragmented. I think particularly with the challenges of capital raising and the wider economic challenges. And I think from the perspective of the banks buying products and services, I think the market's actually too complicated. You know, there are so many firms doing compliance as a service, for example. So I expect to see a lot of consolidation, and I think that's beneficial actually for those firms, but particularly for the banks as, you know, consuming those services, because I think we need a little bit of simplification in the market so we can pick the right suppliers to work with. You know, and I think it's interesting, come back to my sort of analogy about the digital money, but there's still a set of partners, and, you know, Finance is absolutely one of those that provide the sort of backbone everything rides on, right? So it's the core banking systems that own and control the data, that then all these fintechs are sort of a constellation around that.
Mm-hmm. So Charlie, openness, open banking, open APIs, open platforms, open everything. So what's your point of view? How did it change financial services?
So I think, you know, in some respects, everything's changed, like you're saying, but in other respects, quite a few things haven't changed. You know, a branch is still a branch. They're slightly different now. You know, 10 years ago, you used to walk in and there'd be a ticker that would tell you, a machine that would tell you which cashier to go to. Yeah. Now you walk in and there's a person telling you which machine to go to, but it's still actually a branch, right? It's still the same. And what I've seen is that a lot of the core banking platforms, they have digitized processes, but they haven't become proper digital enterprises. So over the last 10 years, I think there's been a huge amount of work actually digitizing existing process, but that total change has not really materialized in the way we might have thought it would have happened. And I think a chunk of that's down to regulation. You know, as always, regulation's slower to catch up with the speed of change. You know, we look at auto-driving cars. You know, the technology's there to drive themselves, but the regulation still won't let them do it fully. And it's the same sort of thing. You know, some of the thoughts that Brett was talking about yesterday, you know, they're great ideas, but regulation still wouldn't allow them to actually happen at the moment. So there's a speed of catching up. And then you look at the open banking and the open APIs, the adoption of that has not been at the pace, I don't think, that we would have anticipated. You know, if you'd been at a conference like this 10 years ago, they would have said, you know, the fintechs are going to eat the banks are going to be dead, they'll all be gone. You know, that hasn't materialized, right? That's all still as it was. So I think there's sort of this equilibrium, this sort of level of maturity that we're getting to now that allows some of these things to start to really happen. I think banks are now comfortable with how they work with fintechs. You know, for a period it was unsure, are they going to eat our business, aren't they going to eat our business? And now I think that sort of acceptance is arriving now of how we you know, work together. And that's become very clear. But I think the adoption of open APIs has not been what we'd expect. You know, I still have multiple interfaces for each of my banks. You know, 10 years ago, there was, you know, pictures of what Apple's consolidated UI would be for all of my banking needs on one screen. That hasn't really materialized. And I think it's just a level of maturity. You know, in the UK, we had things like 7-day switching, and the whole idea that people would be able to switch their accounts super quickly and people would use that at high volume. That didn't materialize either. It's just the hype curve, I think. But I think now we're getting to a stage where, you know, after COVID, the banks are realizing the speed at which they can make changes, right? They went to fully, you know, home working in 7 days, right? If you'd tried to do that at a bank 3 years before, that would have been a massive program. All of a sudden, COVID comes along, they can make it happen in 7 days. So I think that feeling of speed of change is starting to catch up. The technology is definitely there and ready. I think it's just a question of sort of that maturity now. So I think the speed of change now will actually accelerate.
And to that speed of change, what do you think, you know, is the main driver? Is it regulatory requirements? Is it technology? Is it competitive pressure?
Yeah, I think it depends on which angle you're looking at it from, right? Oops, excuse me. The competitive, just the demand of customers of having this sort of technology in their hands. And this affects corporate world as well, right? Because what we see is anybody in a corporate world wants that same user experience as you have in your personal account. And they want that same flexibility in there. So I think it's that need to provide that level of service to the customers. But of course, it's also the competitive differentiation, right? If you're not doing something new like that, then you are falling behind.
Yeah. So Chris, how do you deal with fintechs and with tech fins? Yeah, they can be friend and they can be competitor at some point in time. How is Northland Trust? How is that impacting you? This whole new set of fintechs and non-banks entering the market. So how do you look at this?
Yeah, and no doubt a massive evolution. I mean, we're using that time frame of, you know, 10, 12 years where I think, you know, the fintech impact has been real. And you know, to Charlie's point, like how we interact, again, we've been around for quite some time, and you know, for us to remain competitive, it was without a doubt safe to say that, you know, us partnering, acquiring fintechs, working with them has been critical to what we're doing. You know, so for example, you know, I would say most recently we've done, well, actually, I came to Northern Trust from a large multi-strategy hedge fund in Chicago, which, you know, there was more technologists than there were traders and operational staff. So it was always the mentality of you solve it with technology, you do not throw bodies at a problem. And to be candid, I was a little apprehensive coming to Northern because of, obviously, you know, it's an old institutional bank, and how everything was done. But again, I think it was a combination of my ignorance as well as where we were driving the business. And this is going back again 12 years. So, one of our leaps into this is when we bought the Omnium platform from Citadel, and that gave us the capabilities to provide, in essence, full-blown administration services to the hedge fund community. And that's been an exceedingly successful new application and product that we offer. Another example, more recently, is, and we've been doing this with other fintech firms, where we leg into an equity ownership. So a fintech firm, Paralux, specialized in the alternative space. So that was much more of around privates and understanding, your single line private equity hedge fund investments, and really having that look through capability to understand really what those investments were in terms of sector, geography, and such. And that has launched a new product for us called Front Office Solutions, and that has been well received across the asset owner community, from family offices to endowments to pensions. And another piece that we did, and then this is more recent, we partnered with Standard Chartered Bank recently and opened up a digital custodian, Zodia, based in the UK. So again, where we're bringing things is, a lot of these key partnerships. And one, of course, is with, and in my line of the business is what we do with SAP. And, that piece there is, leveraging the financial asset management platform to provide statutory accounting to our clients. So we actually built on top of FAM what we call investment accounting and analytics. And, that's that digital interface out in the AWS cloud that our clients interact with. And where it's really powerful, and we were talking about the evolution from old static reports, we moved that product delivery from a month-end product delivery to now that it's in the cloud, it is a daily product delivery. And it is, we moved it to global as well. So we have around-the-clock support on that data, because it's being presented out to our client base, and really for them to understand the impact on their portfolio. So it's a really thoughtful it is accounting, but it is a thoughtful presentation of data so they can see trends and the change analysis. So we have this concept of cards within the application itself, but it's, for them to see month over month, quarter over quarter, year over year, the impact on what their investments are and what the market is doing to their investments across the insurance space, which is huge.
Is it fair to say you have a utility for investment accounting based on a collaborative business model?
Without a doubt.
Okay.
I mean, yeah. So it's we feel it's market leading right now. And again, we actually just most recently working with Tony and Christian brought the SAP FAM platform to the cloud as well. So we now are really ready to scale this, and that was one of the main reasons of our selection of SAP years ago, is knowing where we wanted to bring the product. And again, we all know where portfolios change and how they're being stressed. I mean, the environment, when we were down to virtually zero interest rates, insurance companies were forced to invest in virtually everything and anything to maintain those yields. And there's a lot of legacy systems out there in the marketplace that just surely cannot handle the type of products that were being traded. And you know how a trader mentality is. They are you figure it out. I'm going to trade this. You figure out how you're going to account for it and settle it. So that's where the FAM platform has that capability. It is agnostic to what is being traded across the derivatives, across the private placements, across the more esoteric mortgages that are out there. So it's huge for us.
Okay. Let's talk a bit about the payments market. When I think about innovation, when I think about fintechs in financial service, I think it's fair to say Probably most of them are in the payment space. But probably 99% are on the consumer side. And there was nothing on the corporate side. And why is that? You know, Tim, what's your take on that?
So I guess, you know, having worked in a universal bank for 10 years, and I guess just where the concentration of effort goes, I think it's tended to go retail. Not necessarily because it makes more money, but I think it takes more effort, frankly, to do retail banking. Just the regulatory regimes tend to be tougher, and it's, you know, I think since the crisis, it's focused management attention and technology effort, I think, in the retail space. I think that, you know, when I was talking about the front of the bank and the back of the bank before, I think there's a similar shift from really worrying about the consumer channels that, you know, they're certainly not done, but there's a lot of work has been done there. But I absolutely see that moving into the corporate space and corporate payments. And again, I think if you look at the sort of business model, which tends to be a relatively universal business model with respect to the way the banks market their products, so you've got a bundling of lending and deposit services together. I think when people begin to look at that more carefully, they'll begin to conclude, actually, to drive the innovation, we might need to work with partners who can pick a specific part of the puzzle and really drive technology into that part of the puzzle to improve service. Now, that might be through more rapid clearing of payments and more real time. It might be through improved quality of service, through reliability and availability. Or it might be what other data can be put on the wire when you're doing payments to either make that payment more compliant or easier to consume for the end party, basically. And I think that's where we're playing, really beginning to think about, you know, what are the compliance challenges and the regulatory challenges about doing movements of money between institutions, and, you know, can you begin to fingerprint that data digitally whilst using the legacy rails, but begin to effectively put a layer on top of it. And I think, you know, over this next decade, well, I've already seen it actually, there's already groups of banks beginning to think about how do we move money differently, particularly internationally. So beginning to think about the technologies you use, but also the protocols, because I think there's, within payments, I think there's a lot around the protocol as a technology protocol, but there's also a business protocol. So it's like, if I move this money from account A to B, will you do a corresponding movement from C to D? You know, and how you orchestrate that, particularly across time zones, geographies, and regulatory regimes, has been one of the major challenges for international payments and settlements, historically, actually. But now I think technology allows you to basically share a level of trust and a level of data such that you can begin to think about, can I speed that movement of money up? And when I think about the totality of money movements, you know, both within a domestic market, but also internationally, can I move less money if I can reconcile, you know, basically a net settlement arrangement? But again, I think these sort of schemes need to be built on data and trust, and that's really where we're beginning to think about how do we innovate, you know, particularly building on this solid core around payments and the core banking, but putting that, firstly a layer of data, but also a layer of API as well, because I think when you think about how the clients want to consume these services in the future, actually it's not going to be through picking up the phone, it's going to be through the API. So how do I express the change in the business model through a very well-structured API that's consumable and easy to integrate to? So I think there's a whole lot of change going to happen in payments, and it's going to bring a lot of value to the sector in terms of more liquidity or lower liquidity requirements, because you won't need to put so much capital around to move the money.
So is it fair to say that, you know, the status quo, you know, the way we transfer payments from one continent to the next continent and the systems that are in place prohibited innovation so far on the corporate side?
I think it doesn't encourage it, let's put it that way. I think, you know, so I think if you look in the 70s, I think the pain of settlement risk has weighed very heavily on the participants. You know, that obviously drove the creation of CLS right through the BIS. But still, I think only 32% of those global payments are cleared through CLS, so there's lots of other ways the money moves around. So yeah, I think innovation's been, I wouldn't say stifled, but it just hasn't been encouraged enough. And this is where technology is important, I think, because, you know, I think in the old world, we're using paper and the telephone to orchestrate payments. There's a limit, frankly, there's a limit to what you can do with that, right? But when you bring technology in, and particularly things, maybe not blockchain, but really what blockchain is all about is a non-reputable shared information network. And that's really where the power of international payments is, So if, the Bank of London and Northern Trust can share some trust and understand each other, it means they can make those correspondent movements of money at the same time, right? So I think that's where the innovation is going to happen. I think SWIFT's playing a bit of a role in there, which again is a sort of trusted information network. But I think there will be other systems as well that develop.
And Chris talked very much about collaborative business models. Now, how does this look on your side? Are you going down collaborative business models as well? Or?
Yeah, 100%. I think there's, of course everyone's competing, but you've also got to collaborate, and particularly in the international banking market, right? So, it's always going to be, I think, I don't think it's going to change, that in each geography you have a national bank, and then there'll be a set of institutions that then work with their end clients, right? And to an extent they'll be competing, but they've also got to collaborate because, again, coming back to this protocol point, they have to understand the movement of money piece and interact collaboratively in the interest of the economy. And I think from the regulatory perspective, when you think quite deeply about it, actually what the regulators want to do is sort of get banks out of the way of the economy. So the more we can be efficient with the money of movement, the more that capital can actually flow to the end businesses, the end consumers, who are going to drive growth, right? Because ultimately banks, I think, aren't really growth engines. They're growth enablers, but they're not the engine, right? So I think the more efficiency we can put into that deposit and payment layer, the better for the economy and the better for society.
Okay. So Charlie, I have to ask you, there are some clouds on the horizon, which are not only nice. The last couple of years we are very fortunate that there was a lot of money flowing into financial services, a lot of venture capital supporting the fintechs, a good environment really in terms of for innovators to go into financial services. But now we see signs that the economy slows down, inflation goes up, venture capital money doesn't flow as fast as it did in the past. What do you read from that for innovation in financial services? Will it slow down?
Well, I think there is a need now to consolidate things a little bit as well. There is a need to, in some ways, what's happened with all the fintechs coming in is that actually a lot of processes have been decoupled, right? Because now you've actually got an option, whereas you used to go to your bank and you would do a bunch of things all with that bank now. Now, particularly as a consumer, you can go to lots of different places, and it decouples the process in some ways. I think there's now actually an opportunity to start to recouple those by the fact that a lot of the banks are now comfortable in the way in which they will work with fintechs and other types of organizations, that actually bringing us a bunch of those types of organizations together in a much more coupled process, again, is something that we might see. So whilst we might see less investment going into the volume of fintechs, I think we will see more money going into the consolidation of them and really starting to bring them together in order to provide a better service for the consumer. And from a Pioneer point of view, our job is to provide the technology platforms that enable this sort of stuff to happen, right? In what we've done over the last 20 years is we've built in a lot of complexity into these systems for a very good reason. Now we've got to find a way of actually separating out some of that complexity, keeping the core systems very clean, so we can help in doing some of the things that Tam's talking about that allow that change, allow that business change to happen with a much lower cost to the bank to actually enable those. And I was talking to our friends from Nationwide yesterday, that ability to make the change away from the core is going to be something that's really, really important. And, as an organization, we're very well known for having very stable, very, rock solid products. And we've got to keep that. That scalability and that rock solid nature has to be there. But how do we now deploy that flexibility to reduce the cost of deploying such new ideas like this? That is going to be our focus in the future. These things have to be able to change relatively easily without having any risk to scalability or stability.
Times of consolidation and times of crisis have always been great opportunities for software providers.
Yeah, I mean, the demand is not going away, right? You know, the technology is, and the need for technology just gets more and more and more, you know. So I think it's just a question of providing the right technology that enables that ecosystem of things, right? We talk about platforms and ecosystems, and some of these words are a bit interchangeable quite often, but the reality of greater collaboration, more data sharing, right, just leads to a greater need for technology somewhere along the lines. But that technology has to be, we have to be the enabler, software vendors like ours, in providing that simplicity to allow the banks to focus on what it is that they actually want to do, which is provide those new offerings to the customer.
And the platform strategy Dirk announced yesterday is targeting exactly that point of simplicity and standardization, I assume.
Exactly right. You know, separating out some of these layers, and then, you know, transformations. We were talking about this last night over dinner as well. You know, transformations is often the wrong term, right? You know, and it also suggests these massive, you know, turning round of what you do today to be something completely different tomorrow. And we're not doing that. We're doing evolutions of the technology. So even some of the terminology we use, the way we go about doing these things, the way we work with the stakeholders in the bank, who are often not technologists now, of course. You know, they have a good technology understanding, but, you know, they're not actually technologists. So how we bring some of that knowledge and ideas and plans together with other stakeholders in the organization is really, really important going forward as well.
So let's assume we all weather that storm, and we are well prepared and set up for the future because we have the right partners in place, the right technology. So, Chris, looking forward, next 5 years, what are the key things you believe Northland Trust has to have on the agenda to stay successful and ahead of the competition?
Yeah, I mean, a lot of, you know, what has just been discussed is, you know, having the right partners, always looking ahead, never settling for what we're doing today, and always challenging ourselves and understanding what's in the marketplace and what we can leverage. And there's a lot around being able to stay agile, being able to, as situations present themselves, solution. You know, there's the consolidation will continue. There's no question. There's there's a lot of advanced technology out there that needs to be leveraged, and they can make firms better. And so it will be interesting to see how it plays out. And the other aspect, and I know we're running out of time, is that somewhat keeps me up at night is the war on talent and what remote living and remote working has really done to the workforce. And being able to attract and retain talent is critical, because we're talking about technology, but you need the right people to make it work. And so it's critical as well.
Beside all the technology, we shouldn't forget about the human factor.
Yeah.
So that's very true. So 15 years ago, people did ignore or competition ignored PayPal, and then they made a stride in the payments. So if you look 5 years ahead, Tim, will T-Bill be the PayPal for the corporate business?
I definitely believe so. I think for us, the sort of next few years are really, I would call it like the network building. So, I think there's a critical mass you need in that network, and it's your own domestic, your own rails within your institution, and then it's who you partner with and which other rails you connect to. So in some ways, I think it's like the railway industry in the 19th century, right? I think there's a lot of money going into the sector, and people are building different lines, right? So I think it's for us, it's let's pick the gauge that the trains are going to roll down, basically, and then connect the network to the hubs and get most of the traffic running over that network. So that's really where I see ourselves positioning ourselves. So with building institutions in the EU and the US as a starter, and then really following the flow of money, right, to help service clients. So that's where I see it going. For us, it's the years of the network, I think.
Okay. And Charlie, you said Fion is the youngest company here in this round. So you have a bold vision. How do you see the next 5 years evolving?
Well, I think for us, there's that technology play, but also you know, I mean, words matter and the way you say things, and we often refer to us as a vendor, software vendor, and, you know, what Chris is saying there, I don't want to be a vendor in 5 years' time. You know, if we still remain a company that just supplies software to somebody, then we've really failed over 5 years, because this next 5 years is all about that collaboration, working together. So the main thing I would like to see is not being called a vendor anymore. You know, we want to be part of that organization. That's where we're going to learn to build our products better with the feedback from our customers. That's where they're going to get the best use from our products as well. So quite a simple objective, not to be called a vendor.
Okay, I think that's a good point. So being a partner, it's all about collaborative business models. Any fear about the tech fins entering, so non-banks that come with their digital platforms? Do you believe Northland Trust has to fear them?
There's no question that our competitive landscape has already changed. We're dealing with firms that I didn't even know existed 5-10 years ago because of what they have built. So, you know, but I welcome the tech fins. I mean, because it's just gonna, and it was mentioned already, who's gonna benefit is the consumer.
Okay.
We're all gonna get better. Our product is gonna be strengthened. So it's gonna be a healthy competition.
And Tim, I know T-Ball is not fearing everyone here.
I think you always have to keep your eye on the competition and see what's happening in the market. But I think, you know, you need, if you're growing a business, you want to be in an environment where people welcome new innovation and new businesses, and particularly from a risk perspective, you know, who's prepared to work with you when you're growing. And I think that's a massive change in the business model compared to 20 years ago. You know, I worked in a small startup in the dot-com crash, so you know what it's like really to build a business when the times are tough, but it's a good time to build a business. But you need to partner with clients and collaborate with the businesses who understand, you know, the risk perspective. And so I think it's a great time to be doing this, even through the challenges.
Okay. Thank you, gentlemen. I will invite you in 5 years from now. We'll double check, you know, how the world has changed and how your businesses have changed. And I wish you all the best. Thank you for being here on the panel and sharing this insight with the entire audience. Thank you.
Thank you.